What is happening in the markets right now? The speed of change is absolutely electrifying, and if you're not plugged in, you're missing the biggest moves. We're diving headfirst into a whirlwind of developments that are shaking up the financial landscape. Get ready for the updates you absolutely cannot afford to miss. First up, a massive shakeup in the derivatives space with hundreds of millions in positions wiped out in a single day. What does this mean for the big players? Then, we're heading to the UAE to uncover their bold strategy in reshaping sovereign digital asset reserves, a move that could redefine national financial power. Stick around, because we're also breaking down a major treasury diversification play by RSXYZ, investing millions into Bitcoin over 3 years, a massive vote of confidence. And finally, is the king of crypto losing its crown? We're analyzing the data as altcoins are making a serious power play, potentially signaling a massive shift in market dominance. You do not want to miss this. Hit that like button, subscribe, and ring that notification bell so you never miss an update. Markets in turmoil. $900 M liquidated in August selloff. Get ready for a deep dive into the volatile world of crypto derivatives, where a staggering $900 million in long positions were wiped out during August's sharp market downturn. Bitcoin and Ethereum were at the epicenter of this financial storm, with liquidations hitting $277 million for BTC and a colossal $320 million for ETH. This wasn't just a minor dip. It was a brutal liquidation event that forced traders with leveraged bets on rising prices out of their positions as the market cascaded downwards. The catalyst for this dramatic sell-off appears to be a combination of whale-driven selling pressure and a noticeable lack of liquidity in the market. This toxic mix created a domino effect, triggering cascading losses that weren't confined to the top 2 cryptocurrencies. Even assets like Solana, Dogecoin, and XRP, which had seen recent positive developments, were dragged down in the wake of this sharp decline. The intensity of the sell-off was highlighted by a particularly aggressive 9-minute flash crash, during which Bitcoin plummeted by 2.2%. This rapid descent put immense pressure on leveraged traders, many of whom likely saw their positions liquidated almost instantaneously. The options market also reflected the growing anxiety, with traders actively seeking to hedge their exposure or reduce their footprint in a rapidly deteriorating environment. Analysts are pointing to the increasing fragility of leveraged positions, especially in an ecosystem increasingly sensitive to macroeconomic pressures. The interconnectedness of derivatives markets means that a shock in one area can quickly amplify systemic risks. Augustine Fan, head of insights at Signal Plus, noted a divergence in Bitcoin and Ethereum's implied volatilities following Federal Reserve Chair Powell's comments, suggesting that market participants had mixed expectations about future price movements. Historically, such sharp corrections have often paved the way for periods of consolidation and eventual recovery in the crypto space. Institutional support has been a key factor in past rebounds. However, the current market sentiment is clouded by a lack of fresh capital inflow and persistent macroeconomic uncertainty, raising concerns about the potential for prolonged volatility. While some opportunistic traders are looking for entry points amidst the chaos, the market stability remains a question mark until these broader economic conditions improve. This event serves as a stark reminder of the inherent risks associated with leveraged trading, particularly in a market where large-scale movements by whales and liquidity constraints can dramatically alter market dynamics in a matter of minutes. As the crypto derivatives market continues to expand its influence, the critical need for robust risk management strategies and deeper, more stable liquidity pools becomes increasingly apparent for all participants. But what if this volatility is just a precursor to a bigger shift? Stay tuned as we explore how a nation is strategically reshaping its digital asset reserves. UAE's strategic Bitcoin mining reshapes sovereign digital asset reserves. The United Arab Emirates is making significant waves in the global financial arena, not just through its economic prowess, but by strategically leveraging Bitcoin mining to reshape its sovereign digital asset reserves. This forward-thinking approach positions the UAE at the forefront of digital finance innovation, exploring how blockchain technology and cryptocurrency can serve as pillars for future economic stability and growth. The nation's commitment to embracing digital assets signifies a broader trend among forward-thinking economies looking to diversify their financial instruments and hedge against traditional market volatilities. At its core, this strategy involves the UAE actively participating in and potentially leading Bitcoin mining operations. By doing so, the nation aims to secure a substantial and growing pool of Bitcoin, which can then be integrated into its sovereign wealth funds and national reserves. This move is not merely about acquiring a digital asset. It's a sophisticated play to harness the decentralized nature of Bitcoin, its fixed supply, and its potential for long-term value appreciation. The UAE's proactive stance in mining allows it to control the acquisition process, ensuring a steady inflow of this digital gold while also contributing to the security and decentralization of the Bitcoin network itself. The implications of this strategy are far-reaching. For the UAE, it represents a tangible step towards diversifying away from traditional oil-based revenues, embracing the digital economy, and establishing itself as a hub for blockchain technology and cryptocurrency innovation. By holding a significant portion of its reserves in Bitcoin, the UAE could potentially enhance the resilience of its economy against inflation and currency fluctuations. Furthermore, its involvement in mining could foster technological development within the country, creating skilled jobs and attracting further investment in the blockchain sector. Globally, the UAE's move could set a precedent for other nations. As more countries explore the potential of digital currencies and blockchain, the UAE's example demonstrates a viable pathway for integrating these technologies into national financial strategies. It challenges traditional notions of reserve management and opens up a conversation about the role of digital assets in the international financial system. The success of this strategy could encourage other nations to explore similar avenues, potentially leading to a wider adoption of Bitcoin and other cryptocurrencies by sovereign entities. However, the strategy is not without its challenges. The inherent volatility of Bitcoin remains a significant concern, requiring sophisticated risk management frameworks. Regulatory clarity and international cooperation will also be crucial for the long-term success of such initiatives. Despite these hurdles, the UAE's bold vision underscores a growing recognition of Bitcoin's potential as a strategic asset in the evolving global economic landscape. This strategic diversification by a nation is a major development, but what happens when a private company makes a similar, albeit smaller, commitment? We're tracking a Thai firm's massive Bitcoin acquisition plan next. Thai firm RSXYZ invests $5.08 to buy 3,333 BTC over 3 years. A significant development in Southeast Asia's burgeoning digital asset landscape sees Thai public company RSXYZ embarking on a strategic initiative to acquire 3,333 Bitcoin over the next 3 years, backed by a substantial $5.8 million investment. This move is not just a corporate treasury diversification play. It's a clear signal of growing institutional confidence in Bitcoin as a long-term value store and a hedge against inflation, particularly within a region increasingly looking towards digital innovation. The company plans to execute this acquisition through a dollar-cost averaging DCA strategy, a method renowned for mitigating the risks associated with Bitcoin's notorious volatility. By investing a fixed amount of money at regular intervals, RSXYZ aims to smooth out the purchase price over time, reducing the impact of short-term price swings. This disciplined approach aligns perfectly with the global trend of institutions treating Bitcoin not as a speculative trading instrument, but as a strategic asset to be held for the long haul, much like gold or other inflation-resistant assets. This landmark investment by RSXYZ is poised to have a ripple effect throughout Southeast Asia. It could serve as a catalyst, encouraging other publicly listed companies in Thailand and across the ASEAN region to explore similar treasury diversification strategies. By publicly committing to Bitcoin, RSXYZ is helping to normalize institutional adoption and reduce the perceived risk associated with digital assets. This could foster a more robust and mature cryptocurrency market in the region, attracting further innovation and investment. While the long-term outlook for Bitcoin remains compelling due to its scarcity and underlying technology, the company acknowledges the inherent challenges, chief among them being Bitcoin's price volatility and the ever-evolving regulatory landscape. Navigating these complexities will require astute financial management and a keen eye on global regulatory developments. However, the structured, 3-year acquisition plan demonstrates a commitment to a measured entry into the cryptocurrency market, potentially serving as a blueprint for other corporations. The success of RSXYZ's strategy could also bolster Thailand's position as a regional hub for digital innovation and financial technology. By embracing forward-thinking investment strategies, the company is not only safeguarding its own financial future, but also contributing to the broader narrative of digital asset integration into traditional finance. This move mirrors the strategies adopted by other prominent institutions globally, reinforcing the growing acceptance of Bitcoin as a legitimate asset class within corporate treasuries. This strategic allocation of capital underscores a pivotal moment where traditional finance is increasingly intertwining with the digital asset ecosystem. RSXYZ's calculated approach to Bitcoin acquisition signifies a maturing market and a growing understanding of Bitcoin's unique value proposition in a global economy grappling with inflation and monetary policy shifts. While companies are diversifying their holdings, the very dominance of Bitcoin itself is being challenged. We're seeing a dramatic power shift as altcoins rise. Bitcoin's dominance wanes as altcoins surge in shifting crypto power play. The cryptocurrency market is witnessing a significant power shift, with Bitcoin's long-standing dominance showing signs of erosion as altcoins surge in relative strength. Bitcoin's price has recently dipped below the $112,000 mark, failing to find sustained support despite corporate buying and index inclusions. A substantial liquidation event, where a long-term holder sold $2.59 billion worth of BTC, triggered a sharp decline, pushing Bitcoin's market dominance down to 57.6% from a high of 66% recorded earlier this year. This decline in dominance is a key indicator of changing market sentiment and capital flows. This weakening of Bitcoin's position is attributed to a confluence of factors, including significant whale selling activity, substantial outflows from spot Bitcoin ETFs, and a concurrent rise in institutional interest in other cryptocurrencies, particularly Ethereum. While firms like Metaplanet have continued to increase their Bitcoin holdings, adding another 103 BTC to their nearly 18,991 BTC total. This institutional accumulation has not been enough to counteract the broader selling pressure and outflow trends. Ethereum, in particular, has emerged as a major beneficiary of this market rotation. Its price has seen an impressive surge of approximately 70% since June, and the ETH-BTC trading ratio has reached a new high for 2025. This outperformance by Ethereum and other altcoins is reflected in the overall altcoin market capitalization, which has expanded from $1.4 trillion to nearly $1.8 trillion in the past month alone. This capital rotation signals a growing appetite for altcoins among investors seeking higher returns or diversification away from Bitcoin. Technical indicators further support the narrative of Bitcoin's weakening momentum. The cryptocurrency has fallen below key technical levels, including the Ichimoku cloud and the 200-day exponential moving average (EMA). Its relative strength index, RSI, is also below the crucial 50 level, indicating prevailing selling pressure. In contrast, Ethereum is demonstrating resilience, trading above critical support levels and showing robust on-chain activity, which often correlates with sustained price momentum. Analysts are closely watching Bitcoin's dominance levels, with some projecting a potential drop to as low as 35% if institutional outflows from Bitcoin ETFs continue. Historically, a Bitcoin dominance below the 50% threshold has often been a precursor to a full-scale altcoin season, a period characterized by significant price appreciation in a wide range of alternative cryptocurrencies. Such a scenario would mark a substantial shift in market dynamics, potentially seeing altcoins significantly outperform Bitcoin. The current market environment suggests a strategic reallocation of capital by investors, favoring altcoins as Bitcoin's dominance contracts. This trend is influenced by various factors, including ongoing corporate adoption of Bitcoin, evolving regulatory frameworks, and macroeconomic indicators such as expectations surrounding Federal Reserve interest rate adjustments. While Bitcoin remains the largest cryptocurrency by market capitalization, the increasing strength of altcoins indicates a potential maturation of the market, with greater emphasis being placed on diversification across the digital asset spectrum. From massive liquidations to strategic national reserves and shifting market dominance, it's been a wild ride. All right, let's do a lightning-fast recap. We saw $900 million in Bitcoin derivatives positions liquidated in August's selloff. The UAE is strategically reshaping its sovereign digital asset reserves through Bitcoin mining. A Thai firm is investing $5.8 million to buy 3,333 BTC over 3 years, and altcoins are surging as Bitcoin's dominance takes a hit. Don't miss out on any of these critical updates. Smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, and ring that notification bell so you're always in the loop. Also, hit us up on our social channels to join the conversation. We'll see you in the next one.